All right, people. Let's do part two of my stream here. Let me get this over here. Get the microphone set up. Okay, cool. Hey, everyone. Welcome back. I streamed earlier today. Hey, Dejan, how are you? I streamed earlier today at 9:30 a.m. Eastern Time. You can watch the stream on my channel. I suggest you do. It was a very interesting day. I spoke for 60 minutes with no trade signals. And then minute 61, we get a trade signal. So, in fact, that was actually a bad signal and I got stopped out. But then we had a signal right after that where I was able to make my money back. So, it was a break even day. I'll take that considering the type of day we have here today. But it was a very, very interesting learning lesson. I suggest you watch that video for people that are using the Trade Scanner Pro because each day I show countless situations. I show a variety of situations where you learn how to use this tool effectively. Okay, whether you have to use counter trend mode or not. Today, there was no counter trend mode. The trend was pretty clear the whole day. There was no reason to use it. But on on Wednesday, excuse me, on Wednesday, the week before, I had to use counter trend mode. So there's some great examples of that. Excuse me. Sorry about that. You know, my voice goes now while I begin the stream. Anyway, so in this stream, we're going to talk about weekly analysis. We're going to talk. Excuse me. I don't like coughing into the microphone. I apologize. We're going to talk about Bitcoin. We're going to talk about the NASDAQ. We're going to talk about markets that you want to see. Hey, Lav, how are you? We're able to book around. Nice. Okay, nice, very nice. Yeah, considering the kind of day that it is, if you can get away green, I mean, it's a pretty strong trend. I would say it's a pretty clear trend day, but bearish days are, I think, a little harder than bullish days. And the reason for that is when there's a squeeze, it comes out of nowhere and it's very harsh. Where a bullish day, where it's just a slow grind higher the whole day, it's a lot easier, in my opinion. But anyway, nice job. Nice job. But yeah, oh man. So yeah, so if you're new to the Trade Scanner Pro, watch my 9:30 streams. I do Monday, Wednesday, and Friday. If you can't be there in real time, watch the stream after the fact. They are great learning sessions. People don't understand how to use this tool. This tool is not like your typical beginner, it's going to do the job for you type of tool. It's a confirmation tool. All right, anyway, I'm not going to talk about that now. We're here to talk about analysis now. But if you have any questions about that, let me know. Anyway, nice job, Lav. Again, thank you for sharing. So we're going to look at the analysis. We're going to look at technicals for the week here because we want to see what's within reason. Now, I wrote my analysis on TradingView yesterday. I published it yesterday. And this is the chart that I use. We'll begin with Bitcoin. We'll go over to the NASDAQ. We'll take a look at the bond market. And then we'll look at other markets. If you have a market you'd like to see, let me know. Also, if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as northern New Jersey. So I'm like, just 15, 20 minutes outside the city. Now, so let's talk about Bitcoin, right? Interesting day. Now, here's the thing. I don't know what news is driving the market today because I don't pay attention to news. I know better. I know a lot of you, oh, that's nuts. Well, that's why I'm able to get away with what I get away with, and you have problems because the news can lead you the wrong way. It could lead to confusion, especially when the news is conflicting with the price action. I prefer to get my information from the market itself because the market doesn't lie. The market is what it is, and we choose to follow it or we choose to fight it. I choose to follow it because the market will always know more than everyone, right? So, and I had a long speech about that today earlier when there were no signals. I had to find something to talk about. So anyway, in my analysis that we have here, I talked about yesterday, there are a number of scenarios that this thing can choose. We were inside of this consolidation, right? there's a pretty tight consolidation for a number of days. And we're either going to break one way or the other. There's no way to know in advance which way the market's going to break. I know that's, we all like to believe that you can know that. And I know there's many frauds out there that say, see, I called it, but it's random. I could have flipped a coin and a coin could have, told me which way to trade this. Now, it broke higher. It broke the higher part of the range. So that there prompts you to do certain things. You could go with the long breakout if you are a day trader, because the risk on the smaller time frames makes sense in a situation like that right there. But on the big picture, the risk is much greater. So this is harder to take as a swing trade, in my opinion. But as a day trade, there was plenty of opportunity. And that's where something like the Trade Scanner Pro can really help out. Now, this illustration that I have on my chart, I've had this now on there for 2 weeks. I drew this illustration not yesterday, but the Sunday before. The Sunday before I drew this. Now, how do I know this? I don't know this. This is what I believe has a greater probability. That's why I draw those illustrations. But I don't know if the market's going to follow that. The market might follow it. But, again, my illustration was correct. If you followed it, you were on the right side so far, right? Now, again, it's one scenario out of multiple scenarios. And when I was writing my article yesterday, there wasn't really much of anything to report that was new, except we were inside of this range and a breakout was imminent, one way or the other. Now, look where we rejected. You see this up here? Look at that. So I had this line, and I talked about this in my analysis yesterday as well. This 88K area, 88K to 90 area, that's a pretty significant resistance on the daily time frame. This is going to offer day trade short opportunities. Look at this tail on this candle. Day trade short opportunity. How high is that? 88,575. We are now at 87 even. That's 1,500 points of room to play with in there, right? So definitely day trade opportunities. But as far as swing trades go, this tells me, for one, I shouldn't be going long now for swing trades. We're at a resistance and it's a potential double top, right? Now, here's the tricky part of this. As I've been pointing out, we have this failed low or double bottom situation that's been present on this chart now for quite some time. That double bottom implies that this resistance is more likely to break. So this is a type of situation where if you short it, keep in mind you're up against a lower probability, right? There's a greater chance it breaks than it pulls back. Doesn't mean it will. There are no guarantees. But the thing is, you want to play on the side of the probabilities. So on the day trade time frame, sure, you could do whatever you want because you're taking smaller risk. It's not the same game as this. On the bigger time frame, for one, we have no sell signal yet. We need like an inside bar or a pin bar or something over here over the next couple of days that would signal bearish confirmation. And in that scenario, which can unfold this week, I would anticipate a retrace back to this 80K area. That's why I have this blue square drawn over here, which would be a higher low if it gives us a long signal in that area. So the value you get from my stream is I'm giving you scenarios, specific scenarios to anticipate. It's up to the market to deliver or follow through. That's the part where you have to be patient, you have to be prepared. But if we pull back to there, you should be very prepared for a long signal. And if anything, you should not be putting on more shorts or getting aggressively short in this location. This is a high probability area for a higher low. Now, it's very likely we see that higher low. You want to know why? Because when we zoom out, and I point this out all the time, a lot of people, they miss this, what I'm about to show you here. This area is higher than this area, okay? It's a broad higher low, or it's a wave 4. Wave 4 higher lows are very bullish. Hey, Alex from Romania, how are you? this is a very high probability for longs, this area right here, not for shorts on the bigger picture. We have the failed low, it's intact. We have another test of resistance. I believe this resistance is likely to break, and we can see the 90Ks. But if it doesn't break and it holds, we can see a higher low in this area right here. If not, if we push through that higher low, I would be anticipating another double bottom situation. Now, of course, I could be completely wrong. If the market breaks completely, then we have a new piece of information to deal with. But we cannot forecast that, right? The market has to decide that. Maybe some news comes out, some kind of surprise. Okay. Oh, nice. Where are you going, Alex? Um, yeah. Well, Bitcoin clearly has something else driving it. It could be, maybe it's the same catalyst that's driving gold, possibly, because gold looked pretty bullish, and the market looks pretty bad. Now, like I said before, I don't know the catalysts that are driving this, but I suspect it has something to do with the tariff nonsense. Ah, Italy, nice, nice. All right, Tuscany. Oh, cool. Hey, Hussein, how are you? Very nice. All right. Yeah, you're Romanians. You guys like Italy. So anyway, nice to know. So that's the situation. Now, one thing I forgot to mention was the economic calendar, because I usually talk about that at the very beginning. All right, yeah, we'll take a look at the dollar, sure. Um, so let me just chime in about that economic calendar really quick, because it's worth mentioning. On Wednesday, I saw. Oh, is it the dollar that's driving this? Okay, we'll take a look anyway. But I saw on the economic calendar on Wednesday we had like some kind of S&P manufacturing PMI or something like that. That's not a big market mover, so I wouldn't worry about that number. Also, I saw that we had I believe on Wednesday we had from the Bank of England or from Great Britain. I don't know, someone speaking from there. I think a governor, a bank, excuse me, governor of Bank of England, something along those lines. I wouldn't worry too much about that. Okay, either. Um, this here is a daily chart. This is a daily chart right here. And then on Thursday, I saw that we had not Bank of Japan, but the country of Japan has their CPI report, which again is not a major market mover. That's not a dollar mover. I just thought I'd mention these things because there were a little more notable events on the calendar. But those events are pretty much very small relative to the events that we really keep an eye out for. So that's it on the economic front. We do have, though, what? On Thursday, we have some major company reports, quarterly Q1 reports from Google. I saw a couple other big names in there too. So Q1 quarterly reports coming out from companies this week. And I saw big names, IBM. I saw Bank of America is tomorrow. So that's pretty significant. If there are any surprises, there may be some bullish or bearish surprises in those numbers. Like the company may beat, and they may beat their expectations, but then they may come out with lower guidance or something, which will be bearish. So we could say there's a lot of risk in that area this week, but there also may be positive outcomes. There may be some positive surprises from Google or whoever, some of these big names. Make sure you check your calendar, because that can affect the NASDAQ, right? And whatever. And we can see some positive days as a result. It's not that surprising that we're selling off into some important numbers like that. So something to keep in mind. It's not always the economic events. It could be major company events like Google. Okay. Alex says, interesting to see such, right. Okay. So, all right. So you guys follow me on that? So Bitcoin may be reacting because of gold, very possible. But the point is, don't get carried away. This type of candle, this candle is 2,000 points, and it was actually higher. When you see candles like this, you get a lot of, all the hype. The hype machine starts up. Everyone gets all excited. Everyone's reacting. This is an opportunity to create content for content producers, right? To get attention and to turn that attention into money because there's a spike in Bitcoin. Don't be fooled. I had a whole rant about it earlier today about how we need dumb money to make money. Don't be the dumb money. Dumb money reacts to nonsense. This is not valuable information when someone is telling you that Bitcoin is going to 10 million because there's a simple little price spike going on. Don't get sucked in. Now, like I said also earlier, I can't help you with your human nature. If that's you, you're going to give up your money sooner than not. And let me do you a favor. Let me help you out. Quit while you can. Okay. Hey, Kai, there he is. Ah, Kai can't get enough of me today. He was here earlier for the whole stream. Good to see you again, Kai. So anyway, um, so my message, I'm not going to repeat the whole thing because Kai has heard it. Uh, don't get sucked into this. Pay attention to where we are in the bigger picture, the daily time frame here. We're messing around a resistance. If you're looking for day trade longs, no problem. But swing trade longs are going to be risky here, very risky. It's very possible, like I said, very possible that we break out. But if we break out, I would bet on the day trade time frames if we break out into this area because you're taking smaller risk in an area where the risk is higher for longs in general. Does that make sense? Because if you go long right now anticipating the breakout, but instead you get a sell signal, you just basically bought the top of a move, right? And you're taking a lot of risk. This thing can pull back to 80K pretty easily, right? That's 8,000 points. Do you want to get stuck in that? I don't think so, right? So you keep your risk smaller. You day trade. And if that's not your style, you remember, but I don't day trade, then don't trade at all. That's also a choice that you can make. And if you don't short, like I wouldn't short this thing on the swing trade time frame. I don't short this thing on this time frame. As a day trade, sure, I have no problem. But on these larger time frames, no way. If this thing breaks out, Bitcoin could be stupid. Okay, Bitcoin can get stupid and do something like that very easily. And I don't know if it will, but I don't want to be on the wrong side of that. All right. So does that make sense? So that's Bitcoin. Bitcoin is generally bullish. I believe there's a higher probability that we can push this resistance, but are you willing to take the risk is the question. I also believe that there's a good possibility that we see the reversal, but it's not there yet. We are in a location for a reversal, but there's no reversal. So at this moment, I would lean on we're going to break out, especially since I just told you that the bigger picture also supports the idea of breaking resistances. This is a higher low, so we're likely to make the higher high. But if you want to take that risk, you have to decide how you want to handle it. This is high risk, in my opinion, for going swing trade long here. But day trade, you can control your risk better. So you have to figure that out, all right, which one is better for you. But otherwise, if we get the sell signal, like I said, I'd be looking for the higher low. This would be your next swing trade long area. This is the ideal area for swing trade longs, in my opinion, okay? Also, by the way, this entire area between 88 and 80 is still an attractive investment area. I wrote about this in my analysis as well. It's still attractive for longer term investment. If you're still accumulating, this is still a place to be optimistic. These aren't bad prices. I'll start complaining about bad prices at like 95K, 100K. That's where I say, that's when you want to be more conservative on the investing front. And I was right about that before. Now, this time around, if we break up into those prices, I would be anticipating a test of 109. But if the market goes higher, you just follow your accumulation plan. But the higher the market goes, it's wiser to take smaller and smaller allocations, right? Instead of buying $100 a pop, you buy $50 a pop or whatever. You're still accumulating. It's just you're taking less risk at higher prices, and you're taking more risk at lower prices. That's something you want to do, and something that you generally believe is bullish on the long term. And so far, Bitcoin is still bullish on the long term. It hasn't really changed. We just had this pullback that, got everyone all confused. It hasn't really changed. Okay, that's Bitcoin. Let me know if you guys have any questions about that. Also, let me know if there's a chart you'd like to see, any altcoin or something like that. Or it doesn't have to be an altcoin. It could be whatever. That's what we're here for this session for. I'm here to do analysis, to check out markets you want to see. Let's take a look at the NASDAQ, and we'll take a look at the form of the Qs, okay? Q, Q, Q. Oh, look at that. Ugh. I don't like that. You know why? Because I'm long the Qs. I'm still long. We're at 429. Today's high is 441. We've been as low as 427. My average price is 464. I'm losing money. All right. But here's the thing. This movement, for one, it sucks. We broke this inside bar low, right? This is Thursday, the inside bar right there. We broke that low. So this move shouldn't be all that surprising that we're seeing a break of low and some follow through. But here's the thing. Just like that situation that I pointed out with Bitcoin, we may get the higher low. I mean, at this point, I'm going to have to hope for the higher low. I'm not going to bang out of my cues because I believe we're starting to see some market stability. Not today, but we're not moving in a straight line, not yet. And I suspect that we're going to see some support from, you know, the administration and stuff like that, because that's where this came from, right? So I'm betting on I'm just being optimistic about the cues. I only have 100 shares and it's the cues. So it's not like I bought some garbage stock, but we have to see. I'm taking a chance here. My goal for the cues, my personal goal, is I want to see the cues get back up into this area. We need to get back up into there and perhaps push that resistance even a little bit. And I'll sell another call to get out. In this process, just to give you a quick update, in this process right here of just jumbling around, I made $1,300 just on selling calls against my 100 shares. Now, a situation like this, I'm just going to stand aside. I'm going to just sit in my position and hope for the best. I'm not going to sell any calls now, right? Because I don't want to be assigned now. I need to get at least back into the 450s to start selling calls again and being profitable on the position in general. So it's a chance I have to take. Anyway, technically speaking, on the cues, we are in higher low territory, right? This area, just like Bitcoin, is higher low territory. Now, at this moment, there's no reason to buy. That's a nasty red candle. It's off of today's low, but that doesn't mean anything, right? Tomorrow could be another red candle that extends this further. Like I said, we have a couple of reports. We have Q1 reports coming out this week. Maybe a strong report from Google or someone like that is enough to turn this around. I don't know. I mean, we have 30 minutes left. I don't see a pin bar developing here. So not looking good as far as longs go. So it's too early to step in. So what could we see over the next few days? Test of low. That's a possibility. This is 400 even over here. Man, would not be happy to see that, but that's a possibility, okay? Test of low. We can see higher low, like I just pointed out in this area, meaning we get a green candle tomorrow. Maybe we get a green engulfing candle tomorrow or Wednesday, something like that. That would be ideal to see something like that, okay? Followed by, closing the week out looking like that. That would be ideal, but that's a possibility. So when I point these possibilities out, like really you should just take notes because you want to be prepared. There's no sign of that scenario right now unless we had a strong close today, right? Or tomorrow we start out negative, but then we have a strong close. We get a bullish pin bar in this area. Now that higher low scenario becomes in play. So what do you do with that? Well, you could buy the Qs. You can buy some NASDAQ stocks. You could buy calls. You could buy call spreads. You could sell put spreads. There's a lot of things you can do. Okay. So, but that's the scenario I'd be looking for. If we continue to break and we just get ugly, then at that point, I'd be looking for the double bottom. Okay. Or the failed low. But the current structure, this current structure on the NASDAQ, lower high, we do have a lower high right here. So theoretically, it's very possible we can make that lower low. All right. Alex says, since played with the markets, we have been right. But you want to know something, Alex? The roller coaster really has been this, okay, followed by the tariff delay, right? That's really it, because all this other stuff has just been like, a little like, little red, little green, little red. This is nothing over here, right? Today is not pleasant to see. But so we have to see. Again, the charts help us prepare. We can talk about scenarios. So one scenario, we test the bottom. Another scenario. Scenario 2, failed low, meaning we make the lower low, we go to 390, and then we reverse, right? Pin bar over here in this area, right? That's another scenario. If the scenario presents itself, that's a time where you can take some type of action with measured risk. That's why I point these out. That's the value to these streams, right? I'm not just sitting here playing with myself. You know what I mean? So that's where you need to be prepared. How would you capitalize on this? Would you buy some Qs? Would you buy some options? Would you sell some puts? Each type of instrument or each way you go about it has its own type of risk. So you need to understand that. Like selling puts would be probably the riskier thing to do here. Buying calls, if you're buying them 3 months out, would be less risky as long as you're buying enough time, right? Selling puts is riskier because you can get assigned and you could get caught in something that just keeps going lower and lower and you have size that's too big and all that stuff. So this is not exactly an ideal put selling environment. But you could do call spreads. You could do a bear calls, a bull put spread, which is a short put and a long put on the SPX, which means there's no assignment risk, right? You don't have to worry about getting assigned, and you're protected on both the long side. Like if it goes against you, you're not going to get stuck in you're not going to get assigned anything because there's no assignment in the SPX. The SPX, of course, is a very big instrument. You have to understand what you're doing with that. But the point is, you have a number of choices here. I'm showing you the NASDAQ, but the S&P is going to be similar. I don't even have to show you the S&P. It's going to be the same chart. So those are important points to understand. So that's the NASDAQ. Looks ugly now, but I would be more concerned if this candle was bigger. How big is this candle? 15 points. That's not bad considering what we've seen recently. We've been seeing 20, 25 point, 40 point candles. This was like a 40 point candle over here. Okay, that's one day. That's really wild for the NASDAQ. But 15, 20 points, that's about typical. That's about average. And it's true, we could do 15 points lower each day, just 15, another 15. It can happen. But we have to see. We can't forecast it. All we can do is come up with the scenarios, look for confirmations of those scenarios. When the confirmation appears, then we can do something with measured risk. Okay? At this moment, I would do nothing. I'm just going to stand aside and see if we get a reversal. If we get a reversal, I'm not going to do anything either because I'm long. So I'm just going to basically hope we could get back up to the resistance. And then that's where I take action because I'm selling calls. I'm selling a call up there. All right. And my goal when I sell those calls is to get assigned. I want them to take the shares. I sold 3 calls, and each time the call became worthless, and I was never able to get assigned. Now, I could have been a little more aggressive and sold in the money, but whatever. Okay. So that's that. So we have the lower high. Let's see if we can get the higher low. That's the NASDAQ. Now, what I just said about the NASDAQ will also apply to the S&P. All right. It's also going to apply to the Russell, right? They're all pretty much the same. The Dow, they all pretty much follow each other. Just the magnitude of the movement is not the same, right? The NASDAQ, you'll have like a minus $500 or $600 day, but on the S&P, you'll have a minus $150 day on the futures. So it's because of the size of the instrument. That really doesn't matter. What matters is the levels and all that stuff and the price structure. It's all the same. All right. That's the NASDAQ. Let's take a look at the bond market. And we'll take a look at gold too. Let me know if you guys want to see anything. So ZN1, right? This has been in play. So ZN1, this is the bond futures, 10-year note. We're basically, if bond prices go lower, interest rates are going higher. But this price action here is really uneventful, in my opinion. There's nothing going on here. We're not breaking any major levels. We have what looks like some bearish structure, but this entire formation here is nothing more than like a consolidation. There's really nothing going on there. Okay, it's just kind of overlapping itself. So there's nothing really notable about the bond market. We're not breaking any levels. Okay, that would be that. If it broke that support, that would be pretty important. Okay, that means rates are accelerating, and that means banks are going to be going out of business. most likely. You're going to start seeing that. So we have that support reference right there. If we start breaking that, then I start watching for a more bearish bond situation, which means rising rates. Now, apparently, they're trying to pressure Chairman Powell into cutting rates, right? Cutting rates, which would put pressure on the yields, and then this thing would spike. Okay, the price here would spike. So the guy doesn't want to cut rates. He seems to be very reluctant about that, which, I mean, it makes sense to me. He messed up back when he put rates at zero, and now he's being reluctant. So I don't know. I don't know if he's got some political agenda. I don't know. But from what I see, from the facts that I see, it seems like he's trying to do his job correctly. I don't know. I'm not an economist. I'm not a central banker. I don't pretend to know that stuff. Okay. So anyway, that's the bond market. There's not much to say about it. The one little red thing doesn't really mean anything. Let's take a look at gold, shall we? So XAU USD. Oof, look at that. So usually when gold goes berserk like that, I mean that's berserk. That usually means there's fear somewhere, right? People are looking for stability. This could be because of the dollar. Usually this is inverse to the dollar, and this could be why Bitcoin. This could be part of Bitcoin's story as well. Look at that. This is the weekly time frame. This is vertical. Not a time to buy gold, okay? If you're in gold, great. No reason to sell either. But remember when the altcoins looked like this? Not a place to buy gold. Not. Now, I would have told you that the whole way up here, okay? Also, there's a little mini wave count here. Look, 1, pull back 2. This is wave 3, 4, and this is like a 5 with an extension in it. See that? This whole thing is like a wave 5, a mini wave 5. So, and this wave count even goes further back. I mean, we can go all the way back to here and start counting from here. 1, 2, this entire thing is 3. This little mini thing is 4, and this whole thing is 5. This is like a 5 of a 5 over here. So usually when wave 5s appear like that and they extend, it looks like the thing is just going to go up forever. And it's often the worst time. This is where like the retail trade, gold looks like a pretty good investment, guys. I think I'm going to buy some. All right. I don't care how good it looks. When it's vertical like that, remember Bitcoin at 109? When it looks like that, risk is high. That's all I can tell you. Now, to day trade, this is beautiful. You want to day trade gold? Yes, beautiful price action for that. But for investing, you're buying it. Why would you buy the top? Okay. I mean, so that's weekly gold. And I mean, look at this. Let's zoom out a bit. This is just like really spectacular. So if gold pulls back, if there's some kind of strong dollar move or something, gold has a lot of room to pull back. Now, there's all that talk about there's no gold in Fort Knox and all that stuff. And there's a lot of evidence, or there's a lot of, not evidence, but there's a lot of things, a lot of signs that point to that being true. Maybe it's pricing that in. I don't know. But if there's no gold in Fort Knox, if something comes out that's true, this thing is probably going to go a little higher. All right. So anyway, just want to point a few things out. If you're in it, great. Otherwise, the best thing to do in this situation, day trade. You could day trade gold. You could day trade gold futures. You could buy options on gold. Day trade. Take small bites because the risk is very high here. That's all I can tell you. Just the other day, right? Gold looked like it was showing us like a little topping candle. Remember that? This candle over here. And then look at today, right? Up in everyone's face. So if anyone's shorted that, one thing I would not do is short gold. Wait for the pullback. Okay. I was pointing that out on Friday when I had my stream on Friday because the markets were closed. We were doing an analysis stream. And I said, if you want to buy gold, at least wait for a pullback to this area, 3150 area, right here, right? Previous high. If anything, that's your reference point. Not now. Unless you want to be a day trader, then go for it. Nothing wrong with that. You could work plenty of movement there. Okay, gold is up 92 points today. At least the uh, the CFD. That's a lot. Okay, so interesting. Let's take a look at the dollar index, shall we? Any questions so far, guys? Any questions? Let's take a look at the dollar index. D X Y. All right, let's take a look. Ooh, look at that. So this may have something to do with things. Let's go to the weekly chart. So now here's the thing, people, and I pointed this out on Friday as well because we took a look at the dollar index. So the dollar index is making more progress on the bear side. But look where we are, okay? We've broken that low, but when you zoom out, that's still, this entire area is still, we can still argue that this is a broader, higher low consolidation. We are now flirting or breaking the range low area, but we still haven't cleared the area yet. We probably need to break a little bit lower. Okay, I'd say if we're pushing below this area right here, then I'd say, okay, we're broken. It's broken, right? But we have to give it some room because this area where it's in right now is a high probability fake out area. It can very easily fake out here. All it needs is some talk from the Treasury or the Federal Reserve or someone. All they have to do is come out and say something dollar bullish. Okay? And then you're going to see this. You're going to see this. Okay? And you'll be like, oh, I never saw that coming. All it takes is like talk. So when we look at the chart tells us the dollar, compared to a basket of currencies, it gives us a level and it gives us a location where we can sort of place a probability on it. But I would see this as a location for a possible reversal. And this type of reversal, a higher low, it's a failed low, but of a higher low consolidation, it's usually a high probability long. Like if this was a 1 minute chart or something, I would be looking to go long. If I had the confirmation, there's no confirmation. You can't just step in front of it. All I'm saying is don't get fooled by this. Don't get sucked into this. I would not be going short the dollar or things, I wouldn't be buying the euro right now or whatever, saying, oh, the dollar is going to the toilet. I wouldn't say that just yet because I said all it takes is a surprise Chairman Powell meeting comes out. Oh, by the way, blah, blah, blah. We're putting rates to zero. That's all you need to hear. Actually, rates to zero wouldn't move the dollar higher. It should move it lower. Rising rates should bring the dollar higher. And that's what the big concern is. The bonds are selling off. The bond prices are selling off. Rates are trying to inch higher. And the dollar is like, nope, I'm not going with you. And the dollar should be. Theoretically, it's supposed to be. So that's where there's some uncertainty, right? And I agree with that. There's something wrong there. And everyone is saying, well, people are losing faith in the dollar and the dollar is no longer going to be the world reserve currency. All right, that's what everyone's saying. But, how people like to overreact. So, but there is certainly some kind of questionable activity here. But questionable activity aside, if I see a bullish outside bar, pin bar, this is a weekly time frame, I see something bullish, this candle may close as a pin bar by Friday. Who knows? Today is Monday. It has a whole week before it closes, right? So if that turns into a pin bar or something, kind of something like this over here, pin bar, or we get something like this, inside bar, I would be looking for a push up in the dollar. It's not a forecast. It's just a scenario to be prepared for. If the dollar continues lower and we break, like I said, we break that area, then we got dollar problems, okay? And at that point, I don't know. I step aside. If I don't understand what's going on and what to make sense of it, I just step aside. I don't pretend to know it. I don't go and start searching around and seeing what all the experts have to say. Eventually I'll come across some of the economist guys that I follow, see what their opinions are, but I don't trade on that information. If I completely don't understand what's going on, technically, then maybe I'll take a look, right? Maybe I'll learn something. Does that make sense? But that's the dollar. So right now, it doesn't look good. Okay. But like I said, top of gold, bottom of dollar, very possible. be prepared. And you can control your risk that way by taking small day trades. Like, that's how I would handle gold. If I was going to mess with gold right now, that's how I would do it. Any questions about that, guys? Let me know. All right, let's take a look at oil, shall we? CL1. Oil is supposed to be a energy, right? A sign of inflation and a big component of the S&P, or a significant component of the S&P. Would you take a look at SMR? Sure. What is that, SMR? Stock? Yeah, I'll take a look. All right, so we'll do some oil. We'll take a look at oil, and then we'll jump over to SMR. No problem. So what stock is that, by the way? So oil, this is a weekly chart of oil. Oil, like I pointed out on Friday, has this pin bar. This right here is what I'm anticipating from the dollar. That right there, this type of price action where we have this breakout, right? We have basically like this range breakout. But as you can see with oil, it's the same story. It's a higher low. That range is a higher low relative to this structure back here. Now, I know, new catalysts come along and it doesn't really mean a whole lot. But the thing is, the levels are meaningful over time. And there's reason for that. It doesn't matter the catalyst, because what matters is there are people that are often stuck at these levels. So that's what makes a level relevant. If this level sticks, meaning we get the failed low, which is looks like what we got, and that follows through, that's what we're missing right now, is a follow through. If we get stronger oil, right? Stronger oil, we get something like that. That means that's inflation, right? That's a sign of inflation. And that also means bullish for stocks, because again, S&P, large component of S&P is energy. Oil is energy. So I can kind of use this as a gauge, and why I wouldn't be going nuts shorting the stock market if this looks like this. Okay? Just something to keep in mind. Now, okay, energy. Okay. So sometimes these things may not make sense. And if you find them confusing, then just accept that they're confusing. Don't fight it, right? All I know is the chart says that oil is in a failed low area and it may bounce. And if it bounces back up to 70 or whatever, that's going to have some kind of effect on the S&P. Probably a bullish effect. Although we like to think of high oil as bad, right? But the thing is, relationships change. And oil that goes too low, well, that should also be a positive, because it's lowering inflation. It can also be a sign of deflation, right? You got to watch out for that as well. So it can be very confusing. That's why I don't let all that economic stuff really get too much in the way of my thought process. And that's why I work on smaller time frames as well, because this stuff doesn't really carry a lot of weight on very small time frames. Okay? I'm a beginner, missing out on many. Okay. Do you have a video on those basics? Short and long, I know. Oh, wow. Okay. Well, Lev, do you not understand like the economic stuff I'm talking about? Because I don't have any videos where I explain like the relationship with bonds. But I could tell you, if you Google business cycle, okay, Google business cycle, you'll learn these basic ideas of the business cycle and how interest rates basically are the beginning of everything, right? High interest rates mean something for everything else. Low interest rates mean something for everything else. It's part of what's called the business cycle. So if you Google that and you learn about the business cycle, it gives you like an overview of just general, like basic, the economic relationship to like the markets and interest rates, right? Because it all begins with interest rates. And that's what I'm talking about with the bonds. That's what I'm talking about with oil. And they will affect NASDAQ and the S&P. They'll affect all that stuff. Because if money becomes expensive, then it basically, money comes out of the market because less people borrow, and then there's less money going in to the economy, right? That's how the Fed takes money out of the market. They usually raise interest rates. But when they want to inject money into the market, they lower interest rates. Money becomes cheaper. Everyone borrows it. They buy stuff. Businesses invest more, and it stimulates the economy, right? But we have a very conflicting situation right now where we have an inflationary problem, but we're seeing all these other things that aren't making sense, right? And that the Fed is caught like in a tough spot. They're trying to pressure them into cutting rates, and they don't want to cut rates, and you know all that stuff. But anyway, Alex says my average is, but I'm risk free as I have. Okay. Oh, cool. Okay, Alex. All right. So anyway, this is oil, right? And the reason why I bring up oil, because I'm sure most of you don't trade oil, but I'm bringing up oil because again, it can have an economic effect. So you want to be aware at least of what's going on with it. And if you do trade oil, one thing I wouldn't be doing, at least on the swing trade time frame, is I wouldn't be shorting in front of a pin bar. Okay. Now, Lav, if you're not sure of like the candlestick stuff, you can also Google like candlestick patterns. Like that's what a pin bar is. That's a whole other world though. That has nothing to do with the economic stuff, but something you want to be familiar with. I have, well, I was going to say I have a training program, but it's not online right now. That would be helpful for the short term stuff. But anyway, when I get that thing fixed together, I'll have it up online at some point. Also, in the Discord community, I have a Discord community. I don't think the link is in this description, but if you go to some older videos, there's a link and there's some resources in there as well in the free channels. All right, anyway, so that's oil. That's the story there. So like remember, Lav, there's don't get there's a fundamental side of things, which I'm talking about, like interest rates and all that stuff. And then there's a technical side of things, which is like trend and support and resistance levels and all that. Don't mix the two up. Just because fundamentals say one thing doesn't mean technicals will agree. So if you're a short-term trader, like you said, you made $100 earlier, I would imagine you were looking at day trades. All this fundamental stuff I talk about has no relevance to day trades. Okay? Day trades is its own world. And really, you should only be concerned with technical aspects of the market. Don't get mixed up with the fundamental. Beginners make this mistake all the time because all these frauds out there, they don't know and they just mix it in because it sounds good. I'm talking about fundamentals here because this is an analysis stream. But when I talk about, when I'm doing my stream earlier, you don't hear me talking about interest rates. Okay, there are some guys there that can help you with the resource. Yeah, true. Yeah, Alex is also one of the moderators there. But we'll join now. From Twitter. Okay, cool. All right, so yeah, just understand that there is a separation between fundamentals and technicals. The smaller the time frame you work on, the more of a grasp of technicals you have to be, and forget fundamentals. As a day trader, I don't even think about them. But on the bigger picture, swing trades or especially investing, the fundamental side is more important. It is just as important. You need to pay attention to certain things. Like in an environment of rising rates, for example, I don't want to be aggressively investing, right? For example. So even if the charts are looking good, it means that the charts are the potential is going to be limited in the face of rising rates. We don't exactly have that right now. Anyway, all right. So let's move along. Alex has a question here about SMR. Was it stock SMR? Okay, power. Okay, here's SMR. Let's take a look. This is the weekly chart of SMR. If anyone else, if you have something you'd like to see, let me know. All right. Okay. So here's SMR, new scale. This is the weekly time frame. It's pulling back, interestingly enough. Wow. So nice bullish structure going back to previous year, but then you got this situation pulling back. All right, no problem. And you said you've averaged in, you said I think 1180 was your average price. And this thing right now is at 1370. Okay, you got a good average price. So as far as levels and trend goes, this structure, so you're generally still inside of a bullish structure. Let's see, can I see the wave count here? 1, 2, 3. No, that's okay. So this is the whole thing is a 1. This is a 2. This is a 3. Do these overlap? No, they don't overlap. So I'm looking at this over here. I mean, barely. That doesn't count as overlap. All right. So you can argue that this structure right here is still a wave 4. You can argue that, which means wave 5 is not in play yet. All right. So going long this still makes sense. Could you look at, sure, Kai, I'll take a look at that right after this. So you can argue that going long or accumulating a long position, remember, this is the weekly time frame, it still makes sense, right? Now, so here are the scenarios I would look for. You're accumulating, right? And you said you have a much lower average price. Watch this low over here. For one, you really shouldn't go below that. You go below that, you're going to start overlapping. If you start overlapping, then what that means is wave five is a lot less likely in that scenario. So then that's when I would be careful with the further accumulation. Okay. I've been buying since 2.8. Oh, nice. Okay. Oh, so you got some great prices then. Well, so here's what I would tell you then. If you break this low, what is that low? That is, okay. So that's basically like just, what is this low over here? Yeah, so you're looking at around the 11 area, right? Maybe like 11 quarter, something like that. If you break below that and you see the tens and something like that, then what I would do is I would be less aggressive with the accumulation. Maybe hold off until you get an improvement in the structure. Just hold on to what you got, because that means that this bearish structure or this wave four corrective structure is still in play and it's likely to persist. Now, that's the bearish scenario, right? Now that this thing may test the low, it may give you a failed low, which would all be bullish opportunities if you get a reversal off that area, right? So I would watch for that. But if it, like I said, if it breaks below, I would be less optimistic. It doesn't mean that it's just going to keep going, and it may bounce, right? And you may get a bounce up into this area here. Like you may get a bounce like inside of this range, something like that. But I would not be optimistic about a new high at all. Like I would not be anticipating the wave five. I could be wrong, but if I saw a break like that, that would tell me that basically the impulse is canceled, right? Or it's less likely. So that's that scenario. Now, if you don't get that break, if this doesn't break and you get a bullish situation, remember these are weekly candles. So you have the whole week. This candle may even close green. Who knows, right? You get like a mini little high or low over here, and then you get a breakout of this high. Now you have a changing structure, right? You get something like this eventually. You get something like that, then it may be the beginning of the wave five, right? The bullish wave five. Confirmation, of course, a further confirmation would be a break of this resistance right here, right? Which would be what? Basically $20. Nice whole number. Good place to add, right? These breakouts, if you get these resistance breakouts, those are good places to add to your position because you're buying something that's going your way. You're putting on more shares while it's going your way. Good thing to do. Okay. And but breaking this $20 area would be key. Like you break that, I would say chances are you're in wave five. Now, wave five, of course, is not confirmed until you take out the top of wave three. You have to break up here. Then you could say wave five is confirmed. But of course, you want to be in before that, right? You want to be working, you want to be accumulating into the as wave five is developing. But officially, in terms of wave counts, this would be where wave five confirms. But what I'm saying is you start breaking these resistances, that increases the probability that you're going to test this level, which is $32. Okay, so that's how I would treat that. So that's pretty much what I'd go with, and the market's going to have to start proving itself one way or the other. That's how you play this game, right? Like I don't know if it's going to go up there, but if it starts giving you signs and confirmations that it wants to do that it's trying to do that, then you have yourself some evidence there. Make sense? So that's SMR. Thank you for asking about that. Very interesting. And so far, I would still argue that it's still bullish. So far, you're doing the right thing, in my opinion, anyway. All right, we got a question from Kai. USD. Let's take a look. USD, KR. I don't get too many forex pairs, Kai. Let's take a look. Oh, South Korean won. All right. Is that right? Yeah. Okay. Korean won. So let's see what we got here against the dollar. This is the weekly time frame. So we're kind of getting a bigger picture view here. Now, this is all right. So this is the dollar. The dollar is first in the pair. So stronger dollar means this goes higher, right? Stronger yuan, this goes lower, or weaker dollar. So clearly, we see what's happening there. Now, but the trend, this structure is still intact, and this is a higher low, right? So in those situations, this structure right here, that's a higher low consolidation. This general trend on the weekly, I mean, generally the yuan has just been getting weaker and weaker against the dollar, generally speaking. So this situation, Kai, at least as a swing trader, I'd be looking for longs. This looks like a failed low, right? This is the ideal failed low, by the way. The ideal failed low is a low within a broader structure that's bullish, right? Because this sucks in a lot of shorts when it's not a short. So you have this low over here, you have this failed breakout potentially happening, right? And this thing is likely to break higher, which would mean the dollar would have to, get its act together and start working its way up. But this is what I'd be anticipating from this level. This level is a high probability failed reversal or failed low location. And this consolidation, typically these type of consolidations are continuation patterns, right? Momentum continuation. So this implies that maybe over the next month or whatever, this implies a move like this, okay? The higher high, which can also lead to a failed high, possibly, like we had over here, right? We had a failed high here a few weeks ago, failed high right there. That must have been the tariff delay. I don't know, possibly. And Korea is mentioned. They're mentioned a lot in the news with the tariff stuff. I guess because of their neighboring China and all that, whatever. But that's the scenario that I'd be anticipating based on this configuration here. Does that make sense? So what do you say here? Worth zooming out a lot here. Oh, he's saying I should zoom out even further. Let's take a look. So obviously the yuan. Oh, wait, what's going on here? Okay, so the yuan is back up to some pretty significant. Look at this, going all the way back, way back in the day over here. But I was still bald back then. Okay, anyway, yeah, that's pretty significant. We're up in those areas again. I mean, look where we are. We're up there, but we're not at the peaks though, right? We're not at the peaks. So in this situation, you definitely want to note those levels, Kai, because those levels are going to be relevant. You want to note them for sure. Look where you are relative to those, right? That's where those two levels are. So those levels are relevant. And so you have the failed low. I wouldn't be surprised if you test, okay? But those are pretty heavy duty resistances with pretty significant reactions. So of course it would be nice. You would have to have a catalyst. I mean, look at this move right here. You'd have to have a catalyst to accompany that. And the way things are going right now, there's all kinds of potential catalysts that can spark that. So you need the location first, and then you need the catalyst. So right now look, maybe we have the catalyst, and maybe this is on its way to doing something like that. Maybe, I don't know. This is a pretty nasty candle, the bearish engulfing candle over here. That's pretty nasty. But the thing is, you have green, right? It stopped. So this is one scenario to watch for, the failed low and then reversal. But Kai, I'm going to give you the bearish scenario. All right, that's the bullish scenario based on what I see technically. The bearish scenario is we get an inside bar right here this week. If you get the inside bar, watch out for the break of low. Okay? If you get the inside bar, this thing could be a short. Very possible. If it breaks the low, just like that NASDAQ setup that we had. The NASDAQ setup from Thursday, we had the inside bar, broke the low, and look, today it's like, in the toilet. Because usually that's a momentum continuation, and this is pretty nasty momentum. the mother bar, like they call it, it's pretty big, right? So that's also a pretty good possibility. If you see that if you see that taking place, that might be a nice short for a swing trade as well. Does that make sense? Hey Jimmy, I'm seeing a bullish on ICP. Can you do an analysis of this on ICP? What time frame are you looking at? We could take a look at it real quick. On macro level, going back, looks like a major breakout is in the cards. Eventually, timing might be okay. Okay. Well, I know Korea is like in the middle of things. I know they have some drama going on with the trade and stuff. But so that that when you're dealing with like bigger picture stuff like this, it pays to be aware of those economic transitions because it can line up with these technicals one way or the other. Remember, the technicals reflect reality, and they give us I don't have to tell you that, you know that. But when they coincide, that's when you can get some very powerful moves because it's the fundamental that's driving, especially when it comes to currencies, right? Sometimes you get these things like there's some kind of change, there's some kind of monetary situation, whatever, and there's a gigantic move, right? One way or the other. So technically, you have the failed high possibility, but you also have the momentum continuation possibility. You have to see which way the market chooses. But you're aware, and you keep on top of things. So, but that technically that's what I would say. Okay, daily time frame. All right, let's take a look. ICP. Isn't that like internal computer thing, whatever they call that? I think I've seen hype about that on YouTube. Oh no, okay. ICP, internet computer. Yeah, that's it. USD. Okay, let's take a quick look. All right, and you mentioned here. So Kai, let me know if you have any other questions about that or if that was adequate. Okay, so ICP. Now, right away, I see what you're talking about. This is a weekly time frame I'm looking at. Okay, we don't need to look at the daily. The weekly is going to be sufficient for this. Man, oh, this thing really got hammered, huh? All right, so this thing is $4.83 at one time. Oh man, I can't even make my chart small enough. All right, man, someone got caught 630. Yeah, someone got caught in that nonsense. All right, so anyway, I see what you're talking about. Now, here's the thing. You have to understand something. These altcoins like this, they're full of hype, right? So I see why you're looking at the long side, and I would call that the failed low, right? It's the same thing, failed low. You have these lows over here, and you're slightly lower than that, and you may get the failed low. The thing is, right now, these alts are out of play because why? We have an interest rate situation that's all over the place, right? We don't have the speculative environment that we need to really get these things going. So generally, I think the altcoins are just out of play in general. Well, we don't have alt season, like they like to call it. So that's something to keep in mind, right? Because just because the market gets somewhere technically doesn't mean people are just going to show up and buy it, right? There has to be some sort of fundamental drive when it comes to especially investing in these things, especially these things, right? So we're missing that speculative environment. We need lowering interest rates. Rates are rising right now, right? So that needs to change. Number one, Bitcoin is going your way. That's good. It's trying to hold and work its way higher. But usually Bitcoin is the leader of the space, and if Bitcoin's making new highs, it starts to attract money back into the space. But Bitcoin is sort of not going to do that right now because it's pulled back off of its highs. And again, this is a function of interest rates a lot of times. The altcoin seasons that I've seen with these things in general, are typically a function of interest rates, right? So something to keep in mind. Now, that's the fundamental side of things. Technically, yes, Jimmy, you're in a location where you're definitely not buying the highs. Okay, you're in a failed low area, but I would not accumulate aggressively. I would not. If you want to hold some coins because you believe in it or whatever, maybe you have some inside information. Maybe they're going to announce something soon. I don't know. Okay. But you're definitely not buying the top. Let's just put it that way. So it's okay but I wouldn't overdo it. I wouldn't go all in on these. These are highly speculative and these can go to zero. Please keep that in mind. This isn't Google you're buying here. This isn't, you know what I'm saying. So in this situation, this is what I would do. If you're accumulating, okay, I would accumulate conservatively. I don't know how much you have on, but let's just say, I'm just going to give you an example. You don't have to tell me, but let's just say you had $10,000. You're looking to invest 10,000. I would not be all in here. Maybe, I don't know where you started accumulating, but you probably shouldn't be more than 50% in, right? That's probably a lot. If you have 50% of whatever your investment capital was, it's probably too much. Okay. But so I don't know where you are in that area, but I would just be more conservative, not go nuts taking more and more small bites because there's no reason to, especially if you have a decent sized position you're in. This thing needs to change its structure to continue, in my opinion. So what you need to do, or what I would do, not what you need to do, what I would do is I would wait until resistances start getting broken. Okay. Because right now this structure is bearish. You're fighting a bearish structure, which is okay when you're accumulating, right? That's part of dollar cost averaging. But this structure is bearish and there's no sign of improvement. Not really. You have this little attempt to bounce off the bottom there, but that's nothing. In fact, it's formed another lower high. So what I would say, what I would use for confirmation that this thing is improving is break of resistance levels. Because in a bearish environment, resistance levels are respected and supports are broken. So if this support that you're looking at here, $4.18, you could round that to $4. If that $4 breaks, you should probably hold off, in my opinion. Again, this is all my opinion. You should probably, or you want to take another little small bite, but I wouldn't keep going. This thing can go to zero. Just always keep that in the back of your mind. It can go to zero. This is a garbage coin, just like all the other ones. All right. I have 2% of my portfolio and just started buying in the fives. Okay. All right. 2%. But you have to have a total allocation amount that you want to put into this. So let's just say that amount is 10,000. You say, okay, once I have $10,000 invested in this, I'm done. I don't care how much higher, how much lower it goes. I'm all in at 10,000 because that's the amount that you've made a decision to invest at some other earlier point when you were doing your research on this and you said, okay, I like this coin. I want to invest in it, right? So whatever that amount is, right? So keep it small. It doesn't sound like you have a big position. Keep it small. If you want to continue to accumulate, right? Like I said, if you want to be conservative, at least wait for resistance breaks, right? So here, you have a minor one over here. Remember, this is a weekly time frame. So these levels are going to carry a little more weight, right? So you have this level here, which is $4. What is that? $5.27. So basically, you just started buying this thing, right? Around 5. It's typically better if you invest or cost average when the market is going your way rather than against you. But sometimes you can go the other way too, where it's going against you. If the momentum is bearish like this, the structure is bearish, I would suggest you don't be overly aggressive. So your first level is like 5.25. You break above 5.25, you can justify an add, right? Then you break above this level here. The market has to prove this. $6, right? So you're pushing $6, you can justify an add. All right. You start pushing this level here, 7.25. You can those are levels that you can look for. At least it's confirming that the structure is changing because something that's bearish should not break those resistances. It should respect them, right? But if it starts breaking them, that means there's a change. So now that those don't have to be your only ads, but those are certainly you could justify an ad. And if this thing continues lower, you break this support, like I said, that $4 support, then maybe you want to continue a little bit, but I would not aggressively add, right? Especially if you start testing these levels here. Okay, like you have a level over here. What is this level here? 332. So basically 3.25. And then you have this level here, which is what, 282. So you could say 3.25, and you could round that to like 3 even or 250, right? So here, just to kind of give you a view of those supports, right? You have this level here. I think that 282 is the low of the low. I think that's the lowest it's been. I think, yeah, at least in a very long time. I think that's the low right there, right? So these are your levels. Those are levels where you can consider an add, but if you're pushing these levels, you're pushing these supports, realize that that's confirming bearish structure. So maybe instead of, like, let's just say you've been buying $100 at a time. Let's just say, for example, you've been buying $100 every time you decide to buy some more. In these situations where it keeps breaking like that, you buy less. Now, I would not say this if this entire structure was bullish. I would say something else. Like with Bitcoin, Bitcoin is generally bullish. So at lower prices, I encourage people to buy more, right? You start pushing 80, you start pushing 70 even, something like that, 70K, 65K. Well, not really 65, but 70K. That's an area where a higher low can develop. And if you're going to cost average in, you can justify putting on more. The only reason why I say that is because the general structure on Bitcoin is bullish. And it can change. That's why you have to have a point where you stop putting on more and more. This structure is not bullish at all. So that's why I say in this structure, you want to be more conservative. And if it starts pushing those lows, you put on your whatever. Maybe you have a typical allocation amount, or maybe you put on less until this thing changes. Now, I would have argued, I guess this was the Trump election. I would imagine this was the election over here, November. I would have argued that this breakout here was pretty bullish because you broke those resistances, and you could have put on maybe like an ad, but then it gave it all back, right? So you have to be careful of this. You have to be careful of things like this, okay, where it sucks everyone in and then you get stuck. That's why you don't go nuts, right? Or if you have a decent position, maybe like you were aggressive and you went all in on that breakout, when you get a sell signal, when you get like something like this up here, you take something off the table. You just take something off just to reduce your risk. Remember, this game is about managing risk, right? That's what managing risk first, not, oh, I'm going to buy a Ferrari tomorrow, which is how most people like to think of this game. All right, so you got it. You got me on this. You got the levels. These are your levels. That's how I would manage something like this. Now, all that with saying that such a coin, these altcoins are something I have very little faith in. So just understand, they're not high quality investment assets. Like what I'm doing with the Qs right now, I would never do on something like this. Because the Qs are, Google, Apple, Amazon, Microsoft. That's the Qs. This is just some made up, story of dreams. That's what most of these altcoins are. They're dreams, and they make the developers rich, right? That's why I would never treat this like I treat the Qs, just to kind of give you some contrast. All right. So that's what I'm looking at that's how I would treat something like this. So good question. A lot of details there. All right. Any other questions? I know I've been talking a lot more than I usually do, but you guys get me started and then I can't stop. Any other questions? Let me see what's going on over here. I don't see any other questions in the chat. Anything else? So that's ICP, and it's a good observation you made with the failed low. That's certainly something I would definitely I see that, and I can understand why you would be looking to accumulate along. Okay. NOC, what is that? Is that a stock? Or is that a currency pair? I think is that this one? Do I got this right? We can take a look at this real quick. Okay, yeah, this must be it. Again, weekly time frame. Well, you're in a range here. I'll do this one real quick and then we'll wrap this up. Range bound, no question. Range bound, higher low range, right? So it's a higher low, but you're at the high of the range. So, and you're getting a sell candle, right? But you still have the whole week for that to close. I wouldn't go long here. Maybe you get the breakout. I'd want to see a strong breakout candle if you're going to go for the breakout. Maybe you look for smaller time frames on that, or maybe you day trade, or you buy it and hope you can get something out of it before it turns. But this is a high risk area for longs, in my opinion. If you're interested in longs, look for the range low, or at least the mid, somewhere near the midpoint, maybe slightly lower, if anything, right? If anything, for a long. Look at this. This is your midpoint, by the way. Look how much action. Excuse me. Look how much action occurred at the midpoint. Look at that. Okay. So I'm not a big fan of midpoints, but if you're going to look for longs, at least you have some evidence, right? It's a highly random area, or your higher probability is the range low. But for long, this is a bad place for longs, in my opinion. If you're aggressive, open to the short side, maybe buy puts, sell calls, call spreads. That's how I would treat something like that. Anyway, good one, Kai. Thanks for mentioning. These range bound ones, they're nice because they're pretty clear, pretty easy to see. All right. Any other questions? How are we finishing up on these cues here? 433, minus 10 points. We were minus 15 points, weren't we? Yeah, we're up like 5 points off of the low. All right. I'll take it. Better than nothing. We need to do better than that, though. Hopefully Google comes out with some good numbers on Thursday. Hopefully. Google better do something. Someone better do something. All right, you guys. So I'll leave you with that. You guys know where to find me. BTC USD. Like and subscribe to the channel. Please do me a favor if you're new. Let me see, how am I doing with 10 people on? Wow, that's like an all-time high over here. 10 people on YouTube. Wow. I can be a little less depressed now. All right. I only had 3 people earlier, and Kai was one of them. So anyway, yeah. So you guys know where to find me, marketmarketmarkets.com. Do me a favor if you haven't done so. Press the like button, subscribe to the channel if you like the content. If you're watching me on Twitter, like most people are, do something there too. I don't know, like it, do something interactive with it, so that maybe it spreads around or something. I don't know. Or come to YouTube and do me a favor, help me out over here. Anyway, but I hope you appreciate the content. I hope you get something out of it. That's why I do this. I don't do this for my own entertainment, although I do like talking to walls sometimes. Anyway, all right, you guys. So if you have any questions, you know where to find me. I will be streaming again, my Monday, Wednesday, Friday schedule. Check me out at the market open. And if you can't be present for that stream, watch it after the fact. There's a lot of great value in those streams, okay? So enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thank you so much for watching.